Good morning, everybody. Welcome to Beat the Bell, presented by Kane Capital. Hopefully, you guys are all having an amazing trading week. Excited to get today's show underway. As you can see here, today's show is brought to you by TrendSpider. All of the charts that our head traders will be presenting during today's show are TrendSpider charts. So if you like what you see, you can use our link and head over to TrendSpider in order to, there it is, guys. Use link for 25% off. You go ahead and head over to the TrendSpider website and sign up, and you'll get that nice discount if you use our link there. Let's now introduce the panel, starting with Coach Dipka. Good morning, Coach.
Morning, guys. It's good not to be green today. Let's have a great day.
All right, Ramsey Rippers.
The ghost of Christmas past. Good morning, guys. Let's get after it.
You used that feature on the last show, and now you're using it.
Oh, it might be an everyday thing from here on out.
Clearly. All right. Diamond Trades.
What's going on, guys? Once I figure out how to use that, it's game over. Paxton, I'm going to be using that every single day.
Stock Sniper.
Good morning, guys. Great week so far. Let's keep it going and continue this momentum into today.
Mo Mamba.
Good morning, guys. Great trading week. Can't wait for the open, man. Hopefully I don't jinx it, but these swings have been on fire, and the open looks great so far. Let's not jinx it. Great
Yeah,
trading
you've
week.
been crushing it, Mo. Awesome to have you back. All right, guys, let's go ahead and get started here. We're going to give our Fed forecast, and for that, we're going to head over to Diamond Trades. Diamond, what do you got for us?
What's going on, guys? So just me for the Fed forecast today. We're going to keep it fairly light. We'll start with the economic developments that came out on Tuesday morning. The Bank of Japan announced a surprise decision to let the benchmark interest rate rise to 0.5 from 0.25. The Bank of Japan held rates at or near zero since about 2016 in an effort to promote growth and keep rates across the economy as low as possible. So before this decision, Japan was actually like one of the only major economies to sort of stave off those interest rate increases amidst all this global inflation. And people were kind of wondering, how are they going to be able to keep doing this as inflation sort of rises? And, we finally got our answer. They made that surprise decision on Tuesday morning. And the yen rallied against the dollar, obviously, sort of closing that interest rate gap. And so the yen strengthened against the dollar, peaking at up about 5%, as you can see in this chart here. We also had the Nikkei stock average, which is the Japanese stock market. It closed down about 2.5% as investors digest the possibility that companies would have to pay higher interest rates on their debt, right? So that's not necessarily great for the Japanese companies. And then also a weaker yen has sort of pushed up profits for many exporters in Japan. So two of those tailwinds could negatively affect some of these Japanese companies. We'll see how that plays a role going forward. We can move into some earnings that came out yesterday. I know it seems like earnings season is kind of done with, but we had some pretty big names reporting yesterday. We'll start off with Nike. Nike reported an EPS beat of 85 cents a share versus 64 cents a share expected, as well as beating on revenue, 13.3 billion versus 12.58 billion expected. Easily beat Wall Street's expectations. And one of the things that they talked about in the earnings call is that inventory actually rose 43% year over year, but declined from the previous quarter. So because of some of the supply chain constraints that they were seeing, they had sort of this buildup of inventory, right? And that's become a common theme with some of these retail companies. While it's still at an elevated level, it is coming down from last quarter, which we like to see. They're going in the right direction. And the CFO said that may have a negative impact on next quarter's margins as this inventory liquidation continues. So that would be something to pay attention to, not just for Nike, but for all retailers going into the next quarter. The next one that we had was FedEx. So FedEx had a surprise beat on EPS, reporting a 3.18 EPS per share versus 2.81 expected, but they missed on revenues, 22.8 billion versus 23.7 billion expected. The CEO said that the EPS beat was due to their aggressive cost reduction plans. If you guys remember back in September, the FedEx CEO came out and pretty much rang the alarm bells talking about this impending recession, this impending global economic slowdown that we would see. And so they actually took action, way ahead of time. and started reducing costs very aggressively, which helped them beat their EPS estimates for this quarter. The guidance was not great, particularly in their express unit, talking about seeing lower volume there going into next quarter. And the CFO said our teams have an unwavering focus on rapidly implementing cost saving to improve profitability. As we look to the second half of our fiscal year, we are accelerating our progress on cost actions, helping to offset the global volume softness. So this is something that you can expect to see across all industries. And we've seen it in tech with the layoffs. These companies are going to start spending less money, right? As global demand sort of slows down into next year, you can expect to see these companies spending less. And so your B2B companies, you should definitely be a little bit concerned about their potential new business going into next year, as all companies are going to start slowing their expenses. So that's something to just pay attention to going into 2023. But that'll wrap it up for us here on the Fed Forecast, and I'll pass it back to Alejandro.
All right, thanks, Noah. Time for the system, guys. Today's an important day. After several days of not trading, waiting for the next signal, there is the potential that we get a buy signal today. The market obviously looks pretty strong here in the pre-market, trading slightly higher. But here's what I'm going to be watching for. Of course, we have the 50 SMA and the 30-minute SPX chart that's going to really tell the story. I want to see us hold that 50 SMA at the open. And if we do, I would see that as an opportunity to take a trade long, risking a breakdown below the 50 SMA. So if you imagine we open up here, then your risk level becomes that 50 SMA. But remember, guys, the other half of the story, the other piece of the puzzle is, of course, the hourly chart, which is still in sell territory. So I want to see where this 50 SMA on the 1 hour chart opens up. We can see how the market is still in a downtrend. So the smaller time frame, which is the 30-minute chart, it might be telling us bullish, but because we use the hourly chart as well, we know that the overall broader market trend is still bearish. And so for me, if I'm going to take a long, my target would be up to the 50 SMA on the 1 hour chart, understanding that that's likely to serve as strong resistance. And of course, other levels that I would chart headed into the day. Okay. So again, watching on the 30-minute chart to see if we're going to open above the 50 SMA, get the potential buy signal, which would be the bullish cross of the 10 SMA over the 50 SMA. And then maybe here the market has based a little bit after, 4 straight days of selling and about a 200, 300-point move lower from that CPI print when we peaked in the pre-market, guys. All right, so that's what I'm looking at going into today. And lastly, if we don't hold that 50 SMA, guys, if it's a false break over, the bears are back in control. That's all that means. So you have to be able to adapt. And like I mentioned, that 50 SMA is going to be telling us the story. That's all I'll be watching headed into today. All right, guys. Now let's go over to Ramsey for Bet the Bell.
Good morning, guys. You know what time it is. Bet the Bell. Got a series of questions I'm going to ask our panelists. Get their answers, see who's right, see who is wrong. So first question of the day. The indices are up a little under 1% right now. We had a nice green day yesterday. SPX down 300 points in 5 trading sessions since the FOMC minutes on last Wednesday. We've been 100 points extended from the 50 SMA on the system for the last 3 days. I want to know, are we ending green or red today? Noah, what do you got?
So I want to bring in not just sort of my opinion, but something that we saw yesterday from Morgan Stanley's Mike Wilson, who's our chief strategist. Clearly, this guy follows Beat the Bell because he's hitting on everything that we touched on about the possible next leg down in the markets, right? Talking about this post-earnings risk in Q1 2023, fueling the next leg down for markets, something that we've spoken about really multiple times, and sort of how it runs in direct parallel to what we've seen and I've talked about with credit card delinquencies XYZ. And so I'm going to go with red today and red for the foreseeable future. Santa Rally is canceled.
You heard it. You heard it from chief strategist of Bet the Bell. Santa Rally is canceled. Alejandro, talk to me.
We're going to rip, dude. We're going to rip. Anytime you ask me this question, I'm generally bullish. So I'm just going to, stick to my guns. Too late to change now. Let's see it.
I like it. I like it. And let's go with Sniper. Green or red today?
I think we closed red today. SPY doesn't look too strong over 380. Looks like we were testing it. We cracked we cracked it slightly yesterday. I think that there's a chance we don't hold today.
Okay, so we got two red and a green. So that's going to lead us into our next question. I sent this SPX chart to our producer Ryan. And basically, what it outlines is we have this nice, beautiful rising wedge playing out on the daily chart. SPX starting to break down into this gap fill area of 37.48. So, second question of the day. Guys, do you think that we're filling this gap by end of year? That's what I want to know. Does this gap fill over the next 6 trading days into the new year? Dipka, I want to hear from you.
Listen, I love the markets. I love America, and I am rooting for the Santa rally. I'm swinging some calls with Mo, so I'm positioned as such. I feel like volume will sort of head out this week, and I just don't think there will be enough volume to sell us that viciously personally. So I'm betting that it won't fill by the new year.
Wow. Okay. I mean, we're only 50 points away. That's an interesting bet. I thought that you were going to say we're going to fill, but I like it. Honestly, I do. Mo, talk to me.
We're close to the end of the year, so wait. First of all, we don't need to be bringing no analysts from Morgan Stanley in here. You got Mamba for King Cap. The fuck are we doing talking about some guy for Morgan Stanley? We've been on the money with these moves. Come on now. I think we do rally. Towards the end of the year. We only have a few days left. This is the perfect scenario for us to bounce in the market, and we're all over it so far. So I do think we rally the next few days. Unless some shit happens where the market just completely dumps through. We'll analyze it, of course, day by day, but so far I do have the market coming up.
Gotcha. And last but not least, Alejandro.
Yeah, I'm with Mo. I think we rally. So that would be a no gap fill.
No gap fill from Alejandro. So last question of the day. Ryan, pull up those two charts for me. I want the guys to see it. So this is actually two charts that Diamond Trades posted on his Twitter a couple of days ago. As he said earlier, Chief Strategist Wilson for Morgan Stanley posts an earnings risk fueling the next leg down into the markets in 2023. Right here we have the 2021 end of year chart where after December OPEX, that Santa rally was engaged. That fire was lit in the markets. We're right about there today. We had our 2022 December OPEX Friday. So this was a chart on the right going into this week. Monday, we posted a little bit of a red day, the same thing as 2021. Tuesday, yesterday, green. So this chart is kind of playing out pretty nicely. So this is it. This is the last time we're asking this question. Are you guys in or out on the Santa rally? I know we heard from Diamond. Diamond says no deal. He's no deal. I want to hear from the rest of the panel. Alejandro.
Yeah, we're rallying. I'm bullish into the end of the year. I'm gonna stand by that.
All right, guys, you hear that? Dwayne Trade is bullish. I'm loading the boat on my short. Dipka.
Yeah, can you pull that chart up again for me? So you see that red candle on the left of SPX. On the left chart, that red candle is where I sold all my long-term equities. And I was scared that 450 was going to break. I remember this, and I sold thinking that, okay, we're going to start accelerating downward into the new year. Then we absolutely ripped face, and I felt like the biggest idiot. But come a year later, I feel really great as we're trading now around 380. So that is just funny to see in hindsight. But I'm still personally betting on the Santa rally here. Again, I'm positioned in those swings with Mo Mamba. I trust that man. And, just a really nice bounce off of the COVID weekly chart fib at 380. The weekly chart 380 fib has been so strong in the past, and we closed over yesterday. So as long as that's holding up, the odds or the chances that we rally into the end of the week are looking better and better as that holds up.
All right, we got 2-0 on the Santa rally side. Let's go Mamba and then Kaveen.
All right. I hope Coach didn't just jinx us, guys. But no, I do see us rallying. I mean, depends how quick or how strong we rally right to the upside. I do have a gap fill to the upside, so for the next few days, I do have us rallying. So I'm gonna go, yeah, rally towards the into the end of the year.
Gotcha. And Snipe.
I'm a huge advocate of history repeating itself. So based off of how that chart does look, it looks like we are pretty in a very similar spot. Just because of what we saw previously, I'm gonna have to go with yes. So I think we do rally. And
All right, that's
personally,
it.
I think I am sitting out this rally.
Listen, Moneymander is turning over in his grave right now, ladies and gentlemen. We'll hear from him on Friday. But with that,
he's only given his answer to this question 100 times in the past 2 months, so everybody knows
exactly. Everyone knows about it. Honestly, it's a broken record. But that's going to do it for Bet the Bell. Alejandro, back to you.
All right, guys. Thank you, Ramsey. We're going to go over to Coach Dipka for Dipka certified levels of the day.
Yeah, let's pull up the chart, guys. I got a chart from TrendSpider for us today, and I'm gonna review my levels, keeping it really simple today because we have really clean levels. Okay, so our support for the week, or my support for the week, is 380 to 381.09. Nothing has changed, and you see how that demand zone got eaten up yesterday, as well as on Monday. Okay, look at Monday's low. That's going to be 381.09. So Monday's low. Friday's low as well, and yesterday we dipped under it, but you see how we immediately made our way back over, okay? And once we broke and closed over that 380 today, that had me pretty confident that we'd move higher into today. Now, what is overhead? Well, 385.07. That's a big resistance that I have mapped out. Look back to the left on the chart. That left around December 16th, check around like 10 a.m. Look at that massive red candle that we saw, the false breakout at 385.07. I keep going over these break hook and goes on my Twitter page. 385.07 false breakout. Look at the significance of this level. So as we approach this level today, I'm actually going to look to maybe short at 385.07. So 380 support, 381.09 support. Really going to use a zone there. And then 385.07 is going to be my big overhead resistance that I'm watching today. That's going to do it for the levels, guys. As always, 60 seconds, not a second over. We'll pass it back to Alejandro here.
Thank you, Coach. All right, guys, we're going to go over to Mo now, who's got some unusual flow for us.
All right. The ticker we're going to go over is Adobe ADBE. So this ticker yesterday on the 19th, actually not yesterday, on the 19th, we noted some flow come in the morning, right? Some heavy put flow. This 9:25 a.m. Central right here, 254K put flow. I right away went into the chart. I'm going to show you this. I did not take this trade. I was watching it. I just got back from traveling, so I got to get back in the groove. A bit rusty, but I was watching this. I leveled it out. I did call it out on live voice. We're going to go into the chart right here. All right. So the flow came in right on this candle right here. This was the 920 to 925 right here. The flow came in, the put flow, 250K put flow came in for weeklies, right? Right away, what do I see? I see some consolidation above this 335.6 level. What I did was I lined this up. I let the members know that break and hold, I see this dropping down. Now, what's my target? You do have the open over here, right? 332. That would be my first trim spot. And then guess what? We have a nice gap fill. This gap fill, you could see it on a higher time frame. Okay, so I did keep this gap fill. I was looking out for this gap fill in case we do come down here to potentially long it with some flow conviction, right? To add some confidence to that long. So I did have this laid out right here. I still had my eye on the flow throughout the day. And guess what we got, guys? We got some call flow coming in over here at 10:30, 10:43, 11. So I saw this call flow coming in. And what I did was I went back and looked, and somewhat of a good some heavy sizing, right? 61.59. Then you got a nice 160 over here. Again, back to the chart. So the flow started at 10:30. The call flow started at 10:30 all the way. So about an hour, right? An hour into the market. This has been getting hit with some call flow. We'll go over here to this chart and let's see, where's 10:30 right here. So we started getting hit with call flow right here. this is where you always have to analyze your chart. You don't just smack the calls off the flow, right? You want to analyze your chart. Where's the support? My main key level was this gap fill over here on Adobe, right? We have it on higher time frames. This was big for me right here. If we come down and fill this gap and continue to get smacked with calls, I am grabbing some calls here and potentially swinging it unless we get a really nice bounce. So what happened was I ended up coming down through here, and an hour into the market, it's just beginning back-to-back call flow, right? And we finally got that gap fill. This is where I grabbed calls over here. We got a bounce immediately for a nice 10%. I didn't trim. I wanted more on this ticker. The first target I would have is 33275. And then guess what? That 335.6, where that sell-off happened after we broke and held this consolidation. So we grabbed the calls over here. We got a nice 10%. Unfortunately, never did come up and hit my target, but I held onto this ticker. I grabbed 2 weeks out just because the volatility on the on this name, right? I grabbed 2 weeks out and I was watching the close. I really wanted it to close at gap fill to give me further conviction into swinging this ticker into the next day. And that's what we got. We got a nice buyback last few minutes in the market, last 15, 20 minutes. We got a strong buyback, strong close on Adobe. So I held this gap down the next day, and then the rest is history, guys. This ticker went over 100%, 150% about. I exited the rest over here at this target right here for about 100 and I would say 108, 110%. I trimmed some, of course, at my first target, and then I closed the rest up here. Great trade. Again, flow, analyze your chart, take it step by step. This was a beauty off the flow. Thanks, Hondo.
Thank you, Mo. Awesome trade there, man. All right, guys, we're going to go over now to today's top watches. We'll start to wrap up the show here with what our head traders are looking at headed into today. Today's top watches is of course, brought to you by TrendSpider. There's the link again that we showed at the top of the show for 25% off. You can go over to trendspider.com/KingCap. All right, guys, we're going to go ahead and start now with Diamond trades. Diamond, what do you got?
What's going on, guys? My top watch today is going to be Meta. If you take a look at the daily chart, we have some resistance up at 122.6. Came down, held support around 112. So I'm looking for them to continue trading in this range, bounce off of the support, head back up to that 122. If they can break it, that'd be ideal. Maybe go and try and fill that gap to the upside. But I think at least 122 should be in the cards for Meta in the coming days.
All right, Mo, what do you got?
I got AMD here, guys. So 65.8. This is the watch list. If you guys took a look at the watch list, 65.8. I do have a move into 66.8 to 67. If we're able to flip this 65.8 into support, and on the lower end, 64.6 as the put trigger, break and hold that, confirm into resistance, and I got to move to the lower part of this range on AMD from yesterday, from the day before. Yeah.
Awesome. Thank you, Mo. Ramsey Rippers.
All right, yeah. So top watch is Microsoft. We obviously, talked about it a ton. Got the rising wedge here, breaking to the downside, 238.50, 238 area. Daily demand zone is where we bounced on Microsoft, and honestly, where I figured that it would bounce. It's kind of similar to that daily demand zone on SPY that Mo Mamba was talking to us about, 378 to 380. Where we bounce and are now starting to break out higher. If this falling wedge support breaks 238.5 to the downside, I would expect 224 gap fill to be that next level. So watching this rising wedge play out, 238 is my support demand level on the daily.
Beautiful chart there. And last but not least, Stock Sniper.
What's up, guys? So today I got my levels for you, not just on any regular chart. This is a TrendSpider chart. Over at the top, we got 383.29. I'm looking at this as an overall resistance. Under us, we got 382.09. This level right here could be a nice rejection level. Then we got 381.15, which is a nice bounce level based off of yesterday's price action. Under it also is acting as a nice resistance. And then last but certainly not least, we got 380.65. Yesterday, this was a great bounce level, and I'm probably going to be looking to take trades off of it again today.
Beautiful. Thank you, Sniper. All right, guys, that's going to do it for this morning's show. Thank you for joining us. Hope you guys enjoyed what we had to say this morning. For those of you that are unaware, the 6 of us plus Money Mander trade live all day, every day in the Kane Capital Discord. If you want to come trade with us, you can go to kane-capital.com and start trading with us today. Also, if you enjoyed today's show and you're watching on the YouTube, give the stream a like and subscribe. That helps us out a ton. Thanks again for joining us, guys, and we will see you back here on Friday morning at 8:30 a.m. Eastern Time. Peace, everybody.